what would your view be on whether this year-end party or a belief about a rate change or China coming back and presumably leading Chinese markets higher from where they are, does all of this mean that India, which has done really well thus far, relatively underperforms?
The depth that India provides. So if you look at the number of stocks which are above $1 billion in India, that's the fourth highest of all markets in the world. The other markets are the US, China, and Japan. Now, US, China, and Japan are not basket cases. People put direct money into those markets. Is India breaking out from being a basket case to something which attracts money on its own? I think that's really the big change that we need to track. And I think that's something which is definitely happening. Because if that starts happening, if you look at the last year, although screens may tell you a different thing because domestic money was here to save us, but if you look at the foreigners, they were still treating us as a basket case. They were selling left, right, and center. We've absorbed the highest foreign selling ever in our history. That's because of domestics. But did they treat us differently? Absolutely not. So I think that is what is going to change in the more medium term, in my opinion. See, all of this it's not a switch. It will take its own time. And have we started seeing some movement towards that? Yes. If within the basket, if you were to look at some of the big pension funds in the US, we had one of them make a big change. And we at CLSA have written a couple of reports about it more recently, within a few weeks back, where one of the pension funds says that we will only use half of the China benchmark in the popular EM index. Okay, they will not use the full benchmark. What that does is everybody else's weight goes up, and India's weight goes up in a very big way. So, that's still a basket case, but trying to make adjustments to make India far more important. So I think, what will happen, this is my personal opinion on how to see events from here on. Once we see a kind of a peak in Dixie, if we haven't seen one, then there'll be more confidence of money moving into EMs. And as money moves into EMs, and if India's valuations kind of become more palatable, then there will be perhaps more funds trying to attract money specifically into India. See, it is tough to get money into the EMs when investors sitting in developed markets are generally worried and more risk averse. But once Dixie kind of tops out and they want to look for growth, I think that is when this will start happening. That's something which should happen hopefully next year and the following few years after that. So that's really the big structural change to talk about in a more medium-term perspective. In the more shorter-term perspective, honestly, we are at a space and valuations where history is stacked against us to get any significant positive return. So if you were to look at valuations, of course, as an EM or an AsiaX benchmark, India's premium is +3 standard deviation versus where it's historically been. But not just that, people say that, okay, there's China in that, that's why it's colored by that. But if I were to specifically look at, say, top 18, 19 markets that I look at, which make up about 80-85% of global market capitalization, India is the only market which is now near the top end of its trading range historically, last 16-year average. It's, I would say, simply put, above 90 percentile of the trading range we've seen in the last 16 years. India is the only market to do that. This has developed as well as developing markets. Okay, so historically at 20x plus PE, returns have been negative from a 1 or 2 year perspective. Okay, so that's not a great place to be in. So India is expensive on an absolute basis versus its own history, as well as versus other markets. But more importantly, there's this other favorite valuation benchmark that we track, that is India's equity valuation versus bond, that is earnings yield versus bond yields. And there's this magic number of 2, that is whenever bond yields minus 12-month forward Bloomberg consensus earnings yield of Nifty is above 2 percentage points, that's when India starts struggling. And historically, whenever you put money above 2 percentage point, equity returns have been on Nifty has been negative over 1 or 2 years. So where we are as a market doesn't give us a lot of confidence in a more immediate term perspective, but India's prospects on a more medium term perspective are clearly looking quite promising.